Hello everyone, welcome to this channel. My name is Ruben and today I want to talk about Roku. Lately, ARK Invest from Cathie has been buying shares of this company. The reason they are buying is the fact that the share price from Roku dropped from an all-time high of $480 to around $320. Roku has a market capitalization of $48 billion. But first, what does Cathie see in Roku?
Well, Roku, everyone asks, okay, there's a huge transition from linear TV to streaming TV, and what would you invest in, or where would you invest given the $70 billion of linear TV advertising dollars that are going to disappear and go somewhere? Where would you invest? Most people would say Facebook, Google. We would say a lot of people know that. That is no surprise. The surprise is Roku. Roku is becoming the operating system of streaming TV, of connected TVs, and Amazon are in competition, so to speak. But Roku put its own channel. It has started its own channel and is starting to buy content for it. Quibi is one example. It has just moved on to Amazon's platform as well. So we think those two, certainly in the United States, are going to take the lion's share of the connected TV market. And Roku is moving internationally and is finding really good success. And I think that's an upside that many people don't anticipate.
Well, Roku at a glance, I will explain you the business model. The Roku mission is to be the streaming platform that connects the entire television ecosystem of viewers, content publishers, and advertisers. And through their television streaming platform, Roku is focused on connecting consumers to the entertainment that they love, so enabling content publishers to build and monetize large audiences and providing advertisers with unique capabilities to engage consumers. So they have multiple revenue drivers. We start with media players on the left. That's hardware revenue because they sell these devices. Then we have television software in combination with white label for paid television. That's licensing revenue. Combining all these three together, you have content and advertising revenue. Well, of course, Roku has competition as well. You can think about Apple Television, Android Television, the Chromecast, Amazon TV, and Android TV, but also in-house software. And the Roku operating system also powers Roku television models that are manufactured and sold by TV partners who are licensed to Roku OS and leverage smart TV hardware reference designs. And Roku TV models and Roku streaming sticks that enable consumers to access a wide selection of content by connecting their Roku device to the streaming platform via a home broadband network. The Roku OS remains the #1 OS for smart televisions sold in the United States, but also continues to really make good progress in international markets and is the #1 OS in Canada, where 1 in 3 smart televisions are sold as a Roku television model. And Roku is now the #2 OS overall for smart televisions sold in Mexico as well. So through this Roku platform, the consumers have now enough options. So you can think about they can access Discovery Plus, Disney Plus, HBO Max, Netflix, Apple TV as well, and recently they started their own Roku channel, which I will talk later about. Note that there's a difference between ad-supported video on demand, also known as AVOD, and streaming video on demand, also known as SVOD. While Roku has often emphasized that the company's ad-supported video on demand AVOD business model is way superior to that of the streaming video on demand, the SVOD peers such as Netflix, because a company like Netflix, they have to rely on these subscriptions in order to drive growth, and more importantly, a company like Netflix, they also need to produce increasingly expensive original content to retain all those subscribers. Roku is a leader in over-the-top advertising, also known as OTT, through its television streaming service. OTT advertising refers to ads directly delivered to the streaming video services or devices, such as smart TVs or connected TVs, also known as CTV. The ability to bypass television providers removes the limitations associated with broadcast schedules and/or geographic limits, and perhaps of greater importance in OTT's ability is to provide targeted advertisements. Let's have a look at the graph. It's called Subscription OTT Video Average Time Spent in the United States from 2018 to 2022. The black bar represents subscription over-the-top video. In 2018, they estimated it to be 44 minutes per day, and they expect growth. So in 2022, it's going to be 1 hour and 10 minutes, and the red line represents the change. While Roku uses OTT as a means of providing advertising, it also functions as one of the top CTV providers. Remember Apple Television and Roku? Much of the advertising delivered by CTV is used on an ad-supported content, so oftentimes the viewer cannot fast forward through the advertising. We can look at the graph here. It's called the combined US linear and connected television ad spending from 2017 to 2025. The x-axis represents time, the red color represents linear television, and the black color represents connected TV. Well, the trend is very obvious here. Linear television is going to go down in the future, and connected TV is going to increase in the future, which is very good for Roku. And talking about Roku, on a year-to-year basis, Roku has been outperforming other television streaming platforms in terms of viewing hours. While the general market has fallen 2%, Roku has increased 19%. Let's have a look at this graph from the US connected TV ad spending by company from 2019 to 2022. All the numbers are in US billions of dollars. Well, Roku should take a good share of this CTV ads. YouTube, Hulu, and others are forecasted to take nearly 90% of the CTV advertising in this study period. Well, the red line represents YouTube, black represents Hulu, the light gray color is Roku, dark gray is other, and the total is blue. Well, looking at 2022, Roku is expected to collect 1.56 billion, YouTube 2.82, Hulu 3.10 billion, and the others are represented by 6.62 with a total of 14.11 billion. And the trend for this is still positive and growing in the future. So what does this early investor think about Roku?
Daniel, good morning and thank you for being with us. Now, the piece talks about Roku's ambitions in content now. We know it is a streaming giant, but more and more pushing into content, especially with that acquisition of Quibi. But can it really compete with the giants in this space like Netflix and Disney? What needs to happen?
Well, first of all, thank you for having me today. It's a pleasure to be with you. I would say Roku has executed very well over its history and clearly has now gone into the direction of acquiring very specific and very strategic content for the platform. And as you mentioned, made the Quibi acquisition for what has been reported to be 100 million or less. I think as long as Roku is very careful about building that content portfolio and not alienating its great content partners, then I think it can succeed. And based on historic execution, I don't see any reason why the company can't continue to execute. And they've recently raised a significant amount of capital, and that is rumored to be primarily for content.
How does it make that argument, Daniel? How can it be both a competitor and also a distributor? What does Roku need to tell its partners right now?
Well, think about, candidly, as an analogy, what Spotify is doing in terms of content. Obviously, they have great relationships with their primary content partners, the music labels. They have built a great relationship over time, but have now started producing and acquiring content, I would argue, in a very smart and strategic way. That's what Roku has to do. Obviously, Roku can't be competing directly against Netflix and Amazon Prime Video, et cetera. And their to-date content acquisitions show that. So they've acquired the Quibi catalog. That's content that is not viewable anywhere else. It's exclusive. It's a very different type of content, targeting a very different demo than something like Netflix or HBO, what have you. And I think as long as they continue along those lines, they'll maintain phenomenal relationships with their content partners.
As mentioned earlier, Roku leads the smart television market operating system with most of the sales in North America during 2020. Roku TV held a 38% market share in the United States and a 31% share in Canada, making it the leading smart TV OS in both countries. But here you can see the competition on a globally level. With ending of 2020, here Roku TV OS had a market share of 6.4%. Orders represent 44% approximately. Samsung is the biggest with 12.7%. We have WebOS from LG, 7.3%. Sony PlayStation, 6.4%. Amazon, 6.4%. Google Android, 5.9%. And then you have these other companies as well. So in other words, there is a lot of competition out there for Roku. So what does Roku has to say about international growth?
Hi, thank you for taking my questions. I have two. The first one relates to active account growth and international expansion. So Roku had strong active account growth last year. I think you grew active accounts 14.3 million. So that's a tough compare sort of for this year. But at the same time, you're expanding internationally. So do you have a sense for how much of the active account growth this year can come from international expansion? And what's a reasonable level of penetration that we should expect over this year and next year in key markets like UK and Brazil that you're targeting? And overall, how do you measure success in international expansion?
This is Anthony. I'll take that in terms of our international expansion. I mean, obviously, streaming is a global business. The U.S. is ahead of most countries. There's still room to grow in the U.S. And there's even more room to grow internationally in terms of active accounts. And I'll come back to that. I mean, the other way we grow is not just active accounts. We also grow by increasing the monetization on existing accounts. A big difference between a company like Roku and a subscription service is that subscription services active accounts correlate directly to revenue. Roku's is growing and investing in building the monetization on a per customer basis just as much as we are on growing our active accounts. And so, and actually, I mean, in places like the United States, there's a tremendous amount of room to continue to grow ARPU, and that'll be a big driver of growth as well as active accounts. In terms of growing active accounts globally, it's the strategy we're using is the same that worked for us well in the U.S., which is to focus on building active accounts. Well, in terms of our business model internationally, it's to focus on building active accounts, engaging those users, and then monetizing those users. And the way we are building active accounts is through selling our streaming players and licensing our operating system to TV manufacturers and coming to market with Roku TVs. Both of those are working well for us. We're starting to see, we're definitely seeing success there. So, for example, we are already the #1 operating system in Canada. Things are going well in Brazil, in Mexico, in the UK. We just launched TV with TCL, a new TCL Roku TV, increasing the number of OEMs that are selling Roku TVs in the UK, and that TV is getting excellent reviews. It just got a 5-star review, so that's going well. And then we just announced that we'll be launching products in Germany soon as well. So, we're going to continue to build out regions that we're in and go deeper into regions that we're already in.
So do Google and Roku see the future the same or differently? Both Google and Roku seem to have different visions about where connected TV is headed. The short explanation of these competing visions is that Google appears to consider CTV as just another computing platform destined to be annexed into the Google walled garden, while Roku seems to have a vision of connected TV being a completely different new platform separated from the computing platforms. But a conference call will give you more color on that.
Hey, thanks. I have one for Anthony and Steve. I have one for you, so I'll get a question to you. Anthony, on the Alphabet call, I asked the CEO, Sundar Pichai, about their vision for Android TV, and he described, wanted to make Android TV more of a computing platform. Sounds like they want to include gaming and a really robust, ecosystem. I wondered, how's your vision compare to maybe what Google wants to do, and then broadly bring it back to the current dispute you have with YouTube and whether or not there's any closer resolution to that. And then Steve, a quick number from you. You guys usually tell us the Roku channel number of people reached. It wasn't in the press release. You haven't said so far. So that's a question that hopefully you can answer for me. Thanks.
Hey, Michael, thanks. I'm glad you got a question for Steve. Let's see. So, our vision, we've been competing with large companies, including Google, in our space since we started, and we compete extremely well. And, the primary difference in the way we compete versus Google is that we built from the beginning a software platform designed specifically for TV, whereas they take their phone operating system, Android, and they port it to TVs. And so if you look at the history of computing platforms, whether it's Windows on PCs or Android on phones or Roku on TVs, purpose-built operating systems traditionally have always won in terms of market share. And it's because when you build something from the ground up for a new user environment, for new business models, it's just more effective. And so that's really the kind of where the source of our competitive advantages come from, and it's working well for us and has worked historically. We compete extremely well. We're the #1 streaming platform in the U.S. by a pretty wide margin, and it's really those advantages that accrue from having a purpose-built platform. So, for example, the cost structure of a TV is really important. TVs are super price competitive, and how much it costs to build a TV is very important in terms of market share because it affects the price you can sell the TV for. And, we put a lot of effort into making our software platform run with less memory and smaller chips than our competitors. And so right now, for example, although the entire industry is suffering from the supply chain issues and the shortage of chips and the related increases in pricing, it's impacting us less than others because we use less memory than all our competitors' products, for example. So, so I think our vision is that most TVs are going to run a licensed operating system, that we are the leader in that, and we'll maintain that leadership by being very focused and building the only purpose-built operating system for TV. That's what we do.
Roku completed the acquisition of Quibi's content, and Roku has since rebranded the service as Roku Originals, that you can see here, which launched on the 20th of May in 2021. And Roku Originals will also be the brand name for future original programming for the Roku channel, which is the home of free ad-supported entertainment on the Roku platform. And here is a demonstration for you.
Up first, you guessed it, the Roku channel. The Roku channel is your home for free and premium TV. You can stream thousands of free movies and popular TV shows, 24/7 live news, and much more for free. The free movies and TV shows are curated into sections like featured and recently added. There's even a section that recommends titles for you based on what you might be interested in. The Roku channel also offers over 150 live and linear channels in what feels like a traditional cable guide, offering you channels from a variety of genres like live news, sports, game shows, reality, music, and more. If you have kiddos in the house, there's a Kids and Family Hub that features programming from some of the most popular shows in kids entertainment for free. If you didn't know, there's a number of ways to stream the Roku channel. On your Roku device, on the web at therokuchannel.com, or by downloading the Roku Channel mobile app for iOS or Android devices.
What about the numbers? Here are the Roku's financials. I will focus on the right column here, which is the second quarter of 2021. We start with the key operating metrics. The active accounts is up 28% year over year to 55.1 million. Then we zooming in on the streaming hours, which is in billions. That's up 19% year over year to 17.4 billion. The third metric is ARPU, which stands for average revenue per user. That's a very important metric here. It's up 46% year over year to $36.46. Zooming in on the revenue, the total net revenue came in with an 81% year-over-year growth to 645.1 million. They make a distinction between platform revenue and player revenue. Well, platform revenue is the bulk of the revenue for Roku, which had a fantastic growth of 170% year-over-year to 532.3 million. Player revenue was basically flat year-over-year. That came in approximately 113 million. Looking at gross profit, that's up 130% year-over-year with 338.3 million. Then let's have a look at the operating expenses. Roku makes a distinction between research and development, sales and marketing, and general and administrative. That total was up 42% year-over-year with 269.2 million. And the last line which we'll focus on is income or loss from operations, which is positive with 69.1 million. So what are the opportunities for Roku? In one line, it's all about future growth. Well, Roku has the potential reach of linear television and the target capabilities of programmatic advertising. Linear television will be replaced eventually by connected TV, and Roku is becoming the operating system of streaming television. From my point of view, they have developed a very strong brand, and the company is growing rapidly. Revenue is going up, and the next wave of growth, according to the conference call, will come internationally. And finally, Roku also expanded into content by creating Roku Originals. So what are the risks for Roku? Well, I think the only risk mainly is competition here, because the television streaming is highly competitive. You have like Apple TV, Chromecast, so it all includes like the big tech content owners and aggregators. You can also say valuation, but the valuation has coming down recently, so it's more attractive right now. And the reopening of the economy also strongly affected Roku, because it's basically a stay-at-home stock. More people are going outside right now, so they are not watching television right now. But overall, the company is doing better than the overall streaming market, which we saw earlier. In the end, I'm positive about Roku. I would like to thank everyone for watching this video. I really hope you enjoyed it and that you actually learned something, and see you on the next one.